Is Planet Fitness still a good option, or should you pass on it for value? We're talking value investing. So this is the stock chart. It is up $4 billion now. It was at 3.2, then it went back to 3.5 overnight on the earnings. And we're following Ben Graham's foundational value investing that Warren Buffett started with at Berkshire. It should be noted that Buffett, from what I know, he does not follow the fundamental Graham way anymore. It's a combination of Phil Fisher, Ben Graham, and probably a mix of a few others. But we care about value. That means margin safety, buying a good business for the long run, not just a flip, not just a short term, but actually understanding management, business, the prospects, intrinsic value, and the balance sheet. And what you can see here is there is a lot of liquidity. Not only is there the 375, but there's the 81 million and also the 98 million. So if you really think about that, it's more than just 450. It's over 550 million dollars. What I do like about this is you also have long-term marketable securities. So whether those are long-term treasuries or something else, we can just look at that and say that's 96 million. That's another 100 million on top of the short term and the cash equivalent. And you can also look at the property, plant, and equipment. If you look at the specifics, $450 million, that's probably a lot of gym equipment. So that's going to be for a very specific customer if you're going through a liquidity. So you have to keep that in mind and just know that it's not like buying real estate or something that everyone wants. It's very specific to a certain need. You also have their liabilities, but the one thing that I want to know, and I haven't really looked into it because again, I pass on this because of the margin of safety, is just where do they choose where their locations are, what the rents are, and what those leases or that ownership looks like. What I do know is that these locations are smaller, they're going to have less equipment, and they're going to have a lot of people just filled in there, but there's the annual fee, there's the monthly fee, and you also have the different status level. But besides the fundamental side, if you just look at what's been happening, you can see that the stock was at $63, then the earnings came out and they said that they didn't do that well with the holiday season, and then it dropped and now it's recovering. Why is this? Is it because a lot of people shorted it from 63 to 44 or what? I think they've been going for a while. It used to be at $100. So you have to be very careful about looking at this and seeing it as whether it's a recovery or just undervalued. The best thing you can always do is really try to understand the business, because even if you can make a flip, if you can make a dollar or a good return, you want to make sure that there is that margin of safety, because you want to protect your capital at all times. You don't have to chase every opportunity. You don't even have to chase good opportunities. You want to chase great opportunities. So sometimes it's better just to stay patient. And this is one of those cases where I really do like Planet Fitness, but right now I'm going to have to pass. What do you think?